Well, we do thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Let's take a look at some new information this morning from USDA. They said we had an overnight export sale to talk about. So on the details, it was a sale of corn. There was an amount of 101,600 tons, and it was to unknown destinations again. The marketing year would be the 2021 and 2022 marketing years, so that would be for the new crop. Just want to add that to the total here for the upcoming weekly announcements. Now, how are the markets performing? It's really something to watch today. On the corn market, here we go. We have the May contract, as we mentioned. This appears to be in the full throes of a squeeze going on. The May contract, 21.5 cents higher at 7.02 per bushel. It had been 40 cents higher overnight in expanded limits. In fact, corn is in expanded limit mode today. July is 7 3/4 higher at 6.65 1/4. December 4 1/4 higher at 5.72 per bushel. I want to welcome in Brian Hoops of Midwest Market Solutions, and we'll chat about the markets here for a little bit. On the corn, big ranges here. Looks like things are really ramping up for delivery day on Friday. What do you read into the market action today? We've been on both sides of unchanged here.
Yeah, if you like volatility, we certainly have that. We're not even into the heart of the growing season yet. We're still in the planting time frame, and more producers are telling us they are finishing up their corn seedings and moving on to soybeans, and we'll wrap them up soon. So it's not taking very long to get this crop in the ground. But boy, what a lot of volatility, sharply higher overnight. And I thought the term you used, squeeze, was exactly correct. That's what we're seeing. It's going into first notice day. Typically, we have large deliveries because we have big stocks, and that's been the case for the last couple of years. This year is completely different. We are in tight stocks mode. Stocks are likely to get even tighter, and the remaining crop that's out there, it's in pretty strong farmer hands. It does not want to leave, and probably won't leave until we see the highs sometime this summer. And for that reason, we're seeing drought in Brazil also combine to give us ideas. We're going to see increased exports this year. So far, for the month of April, we've already exported enough corn to reach the USDA forecast that they are projecting by the end of August. So we've got a long ways to go here in our export markets, and I think the USDA is going to have to make adjustments as we go into subsequent months to explain these exports and bump that up. And that just means tighter ending stocks for this old crop year. That means tighter carry-in numbers for the new crop, and that means it's going to be more volatile this growing season because we really cannot afford any type of yield losses this year.
Let's look at soybeans, and on the soybean trade, here we'll go to July. We had a high of 15.74 3/4, a low of 15.22. That is a 52-cent trading range, almost 53 cents. Right now we're at 15.41 3/4. That's up 2.5 cents is all, but it's no indicator at all of the volatility here. November soybeans, 1 1/4 lower at 13.60 3/4. And then you get to the wheat market, and in Chicago, July wheat, we're now trading 3 1/4 higher at 7.42 3/4. That's 16 cents off of our earlier low this morning. And in the Kansas City market, you have July currently trading 10 3/4 higher at 7.19 And in Minneapolis spring wheat, you have July now 5 3/4 higher at 7.54 3/4. Brian, is the trade just that afraid of freeze damage and drought damage on the wheat? Is it running out of gas on this rally?
Yeah, the crop ratings that came out yesterday, it was a little bit of a surprise. Wheat was down 4% good to excellent, so there must have been a little bit more damage because of frost than what the trade had expected. We were looking for, basically steady type ratings last week, and didn't receive that. So that got the wheat market a little bit of a boost in the overnight, and that's carried into today's activity as we're seeing double-digit gains there in that hard red wheat contract. But all these markets here benefiting from a trending lower U.S. dollar index, as the market is anticipating. The dollar index anyway is anticipating some inflation in the United States, and that's going to weaken the dollar, and that should be a boon for a lot of these commodities, and we're starting to see the effects of that.
What an amazing rally here in recent days. We'll come back and look at our livestock trade in just a moment. Come on back. Well, let's go ahead and take a look at our livestock trade with help from Brian Hoops. So let's take a look at our live cattle market. And even though the grain markets have turned back to the plus side again, we have Live cattle trading higher. June now up 62 cents at 116.90. August up 42 cents. On the feeder cattle market here so far today, you now have the May contract one tick higher, 2.5 cents to the upside at 137.30. Had a high earlier of 140.55. Look at that range. That would be $3.20 for that trading range just from the high to where we are now. And we had actually been about a $0.50 below this. We have August now $1.10 higher at 151.40. So volatility in the feeders as well today. On the lean hogs, you now have the June contract $1.50 lower at 105.35. You have the first 4 contract months all over $1 to the downside here, weaker on the day. Interesting when you look at the cattle market here, Brian. We had the cash cattle trade yesterday, just a few head that sold, but nothing really out of the range that we had last week. But is the futures trade just so oversold that the market is finding a little bit of buoyancy to it?
Yeah, I got to believe that to be the case, Marlon. You know, the report that came out Friday was traded on Monday with some lower prices. We bounced off support and saw a pretty good rally. It looks like the show list numbers are going to be larger this week compared to last week, almost 5,000 head more. So it's going to limit the cash upside potential. But at least the futures market trying to bounce off of some support here. I think we could see a decent recovery as we are so far oversold and due for a technical bounce in this market.
Now, I wanted to get your thought, too, on the action that we have had here in the lean hogs recently. On the lean hogs, remember, we cleared $110 there about a week and a half ago or so, but then they dropped off, and now they have been making a run. We're down today. But are they in the process of trying to retest those highs, or do you think that could be it for a while?
Yeah, I thought, you know, the cash markets would stay pretty firm here in the next several weeks as most of the tension is going to be on field work and field work preparation. I would not expect the cash markets to really sell off in here. So I think the future is trying to retrace and go back and see if we can get back to those old highs. You know, we had a series of lower lows and lower highs going for a while, but we've kind of negated that bearish technical action. Moving back up to testing those highs would be positive, be confirmation of the resumption of the uptrend in the market.
Good information. Thank you, Brian, for joining us today. Brian Hoops is with Midwest Market Solutions. Janet, I'll turn it back to you.